Welcome to today's morning report on Thursday, the 12th of May, with me, Richard Perry, market analyst at Antec Markets. We've got a relatively cautious open on European markets. We've got the stock markets that are slightly down, about half. Well, I say slightly down, about a percent actually. Although they have clawed back some of the losses that we saw at the open, and also we're seeing a little bit of risk retrenchment as well with the euro, sterling, and also some of the commodity currencies also weaker, but nothing too significant. We're seeing the oil price, for example, which is stabilised overnight. It was strongly high yesterday on the back of the EIA oil inventories report, and it just has looked to stabilise. So let me just show you that oil price, which has just sort of stabilised overnight after that strong rally yesterday. Now the sort of caution still comes with these continued downside moves that we're seeing in treasury yields. The 10-year treasury yield continues to fall. That suggests the market is still concerned about sort of growth implications. And you saw some of the corporate results yesterday, or announcements yesterday from Wall Street. Macy's, for example, was very disappointing, suggesting that the consumer is not especially strong in the States. And that is a concern, and that sort of sent equity markets generally lower as a result. In terms of the dollar, we're seeing sort of quite a choppy move on the dollar in the last couple of days, really strongly down yesterday, rebounding today. No significant direction, but it just looks as though that the rally that we've seen has sort of come up against a bit of a stumbling block, and it'd be interesting to see if it continues to sort of fall back again. But generally speaking, the dollar is slightly stronger, as I said earlier, and we're seeing that sort of playing out through forex markets. Also, this sort of precious metals are also lower. The gold price is about $6 down, which is about sort of 0.5%. Silver also weaker. And we're seeing that sort of, as I said, playing out through the markets. Now, in terms of what we've got to look forward to today, it is Super Thursday, which for the Bank of England, which is basically when the Bank of England announces monetary policy. It sort of publishes its meeting minutes, and it also publishes the quarterly inflation report, all at 12 o'clock. And on UK time. And it's interesting because this is sort of getting ever closer now to the Brexit vote on the 23rd of June. This is the interest rate of the UK. Hasn't moved, has it, since early 2009, when was the last time there was a move. So no expectation of a move today. And also the expectation is that the voting will be 9-0 in terms of holding rates as well. So no dissenting voices expected there either. Now the quarterly inflation report could produce a bit of volatility on growth expectations and inflationary expectations, but it's likely to be sort of fairly muted actually. You got the as I said, you got that Brexit vote referendum coming up at 23rd of June. And the Bank of England last time out, in the meeting minutes last time, sort of cut back its sort of expectations of growth, and was saying that the Brexit vote was having an impact on investment decisions, and you could see a cutting back of growth expectations today, and also inflation as well will be an interesting point. But in front of the Brexit vote, you're not likely to see a great deal of sort of strong positioning from the Bank of England. But we'll wait and see what happens at 12 o'clock today. We've also got the weekly jobless claims for the States, and that is expected to come out at 270,000 jobs. So no real change from last week. So my chart of the day is the DAX, and the DAX has rallied in the last couple of days, but has fallen over, and now I'll show you on the hourly chart that falling over is putting pressure once again on the downside, because we've opened weaker today, and that sort of would be sort of 3 days of negative candles really. We saw this recovery, but that recovery is sort of topped out now, produced this sort of small top pattern, which is from sort of 99.50 measured back from sort of 10,100 area. So you're looking at sort of around about 150 ticks of downside. So you're looking at sort of 98.50 being your sort of projection to the downside. Not a million miles off that. Sorry, 98.50 figure. Sorry, 98 figure. My maths is a bit rubbish. 98 figure. So not a million miles off that. Today already, but it certainly suggests that this move is rolling over. You've got this sort of downtrend of lower highs in the past couple of weeks, which I can show you here on the daily chart. And it just looks as though it's putting pressure once again back. You're back towards that 61.8% fib level, aren't you? Which has been such a consistent turning point for the DAX. Not so much in the recent correction, but historically has been a very strong turning point. And just looks as though it's sort of rolling over, putting pressure onto the downside. These momentum indicators are already rolling over. Stochastics sort of stopping that rally, and the MACD line's never really got sort of anything other than neutral really, and the RSI has sort of rolled over again back below 50. So it's sort of beginning to suggest that we are putting pressure to the downside possibly, and we could see more pressure back towards that 97.37 low, which came in. Now that 97.37 low is key because it sort of continues this progression of higher lows. And it sort of protects also this 95 figure area, which are these key lows from March, April, and they are the really important lows. I think if we saw a breakdown of those lows, I think we could see possibly a move towards a more significant retracement, possibly back towards the February low, but certainly those are the big important lows, 95 figure, but at 97.37 at the moment remains intact, but could come under pressure from this correction that we've seen in the last couple of days, which could continue. Now we've had this opening gap low. We're actually looking to sort of unwind that gap initially. So 95 figure is that gap. If you see a filling of that gap and a close back below 95 figure, that would be bearish. So that would be the gap close and a continuation of the move lower. But at the moment we're just unwinding back towards that gap resistance at around that 90 sort of at 99.50. 99.50 is that gap, and it's sort of rallying back towards that. Yesterday's closed 97.75, and yesterday's high incidentally 10,008. So the sort of downside pressure is continuing on this DAX chart, and the momentum indicators are sort of corrective and still on the slide. So looks like there is further downside potential in the RSI as well. So we could see further weakness, but once this little technical rally on an intraday basis unwinds, we could see further downside. So I wish you good luck in your trading on the DAX today, and I'll speak to you later. Thank you.